we have Spencer Ante here with really the big story of the day, and that, Spencer, is Facebook.
It should be called Facebook Day, not Groundhog Day.
It should. I think a lot of people already have
for just 1 year.
Facebook fatigue. The company filed its plans to go public last night. People were waiting for them all day. What did we find out in the 150-page document?
Well, I have it right here. I'm going to read it to you.
Thanks.
No, I'll spare you that. There was no smoking guns. That was one of the big surprises, I think. That there was nothing that really blew people away in terms of like being really bad or really good, because this company has been, as we know in the Wall Street Journal and other places, been heavily reported. There's been a lot of whisper numbers, and that's really where you need to start.
The biggest surprise for people, just broadly speaking, may be that we're talking about a tech company going public or a social media company going public that makes money, that has a lot of revenue, that has a business model and a plan, that this isn't necessarily some company with a valuation that's been pulled out of the sky.
Yeah, that's absolutely true. I mean, but if you've been following Facebook, which a good amount of people have, maybe not like Main Street America, but now they will, and the numbers are really just truly impressive. So the company made $3.7 billion in revenue last year, and $1 billion in profit, which is a pretty good margin on that enormous revenue number.
Where does that put them in the world of tech companies that are already public, or against their peers?
It puts them in the top echelon. I mean, Google has revenues in the tens of billions of dollars. The bigger, older tech companies like IBM and HP are, over $100 billion. But the thing that brings Facebook into their league is its market valuation, which is going to be between $75 and $100 billion, which would be the most valuable IPO, internet IPO ever.
Well, and that sort of leads me to, the numbers you just talked about. You talked about the fact that that's a pretty good profit margin on a revenue number like that. On the other hand, that is an extremely high valuation. And when you look at the profit versus valuation, it doesn't quite fit. This is obviously, there's a lot of hope and optimism and wishing when it comes down to saying, all right, Facebook's a $100 billion company.
Yeah, no, absolutely. That's a good point. The PE ratio on this company, if it had a $75 billion valuation, would be 75, which, as you know, would be pretty high. But it wouldn't be.
The market right now
wouldn't
has
be out
a valuation of like 12.
Yeah, but it wouldn't be, incomparable to some other high valuations we've seen, high multiples we've seen in other internet companies like Netflix. Netflix's IPO was well over 100 at one point before it had its crash. So it's not totally crazy. But yes, I think the big question for Facebook going forward is, they have 843 million users. 483 million of them are daily active users. So very high level of engagement. When we go back to our desks, we're going to go probably check our Facebook accounts. That's what that means. But the real thing is, can they beat the law of large numbers? Can they keep up this massive growth rate, not only in their user base, but in their revenues and their financials? And for a company that has this many users, the revenue is actually not that large. I think that's going to be one of the big challenges for Facebook, is they need to get deeper into Madison Avenue, especially with the big brands. Like, it's a lot of small businesses advertising on Facebook.
Is it ultimately advertising that's going to dictate their growth, their valuation going forward, or is it going to be something else? Meaning, is the most important thing for this company to show double-digit, however strong that advertising growth might need to be, or is it that they have other things that makes them attractive for investors?
In the near term, it will definitely be advertising driving the valuation. They point out in the S1 that the advertising accounts for about 88 or 90% of its revenue right now. So that's going to dictate things in the near term. But going forward, they do make money from other sources. So the other big revenue stream they have is called payments, right? So Zynga, which you've talked about in the show, this company where they go and buy virtual cows and sheep.
Right.
Facebook gets 30%. A cut of every virtual good that gets bought on Facebook. So if they can...
And Zynga's a hugely popular
And Zynga
platform.
is actually 12% of Facebook's revenue, which is another interesting, very codependent relationship there. So can Facebook get more money out of payments, and can they expand into other areas where they can make money, like e-commerce, which today they have virtually none?
Well, and Google's almost a good example of this, where their core model is still heavily advertising based, but they're in so many different businesses. There's a lot of different ways you can look at a Google and see different growth stories, things to like about it, beyond just, what more can they do with their ad dollars?
Yeah, absolutely. So Google has done just fine by getting money mostly through advertising, but there comes a point in a company's evolution where investors and shareholders want to see a more diversified revenue stream because it's considered to be more stable and have a higher growth potential. So for Google, they're trying to get it out of YouTube with video,
right,
and they're also trying to get it out of mobile with their Android operating system, which
right,
they're showing some promise
in
now.
David Widener, bottom line, we've run through the numbers, we've given people a sense of this company. They're going public within the next couple of months.
Probably the next 2 or 3 months.
Do you buy it?
Come on, you had to know this was coming, David.
I don't think so. I don't think so. I think that the hype initially is a little bit too much, and I might wait. I might wait a little bit.
So you don't think this necessarily the Google where they go public, there's a lot of hype, but they continue to impress?
Well, the thing with Google was that when they went public, it was kind of priced low.
Yeah.
And it was kind of that offering, I don't want to say it was botched, but it was, the price came in very low. And so you saw this explosion right afterwards because people said, oh my God, that's cheap for Google. And I don't think that's going to happen with Facebook.
No, Google's valuation was 6 or 7 times less than what Facebook is going at. Facebook is going public. It's a very interesting thing. They're going public about 8 years after they were founded, which is a little bit longer than companies usually take. And Zuckerberg kept pushing it off, Mark Zuckerberg, the CEO, because he knows that, like a lot of entrepreneurs believe today, that being in the public markets is not a fun job. You have to deal with all these outside people that don't give you a hassle all the time. So he pushed it off, and also it's a testament to the value of these secondary markets, which is a new phenomenon we've seen, that a lot of investors have piled into this stock ahead of the IPO and driven up the price pretty substantially. So they're going to sort of like be the beneficiaries of the IPO as well, and that we haven't seen that as much in the past, and so that's another reason why the valuation is so high. Yeah. The other thing I will say we have to just point to one thing, which is the Mark Zuckerberg letter.
Yes.
Okay?
Yes.
This is not just a regular company, okay, that just wants to make money. In fact, Mark Zuckerberg in his letter in the S1 says Facebook was not originally created to be a company. It was built to accomplish a social mission, connecting the world and connecting people. So I think what he's saying there, in the same way that the Google guy said, don't be evil, there's a larger idea here. There's a larger vision that they don't want to just make money. They're really trying to sort of connect the world, connect people,
and we give
reinvent
them about
businesses.
8 quarters to change their mind after
he's going to have to live with that now. It's going to be hanging out there on every earnings announcement. And I wonder, is Mark Zuckerberg going to take the lead on the Wall Street earnings calls? That's another interesting question.
Good point. Good point.
Or is Sheryl Sandberg going to do it?
Right. There's so much to dig through. Again, Spencer Ante on set here with us to do just that. Plenty more details coming out in the weeks ahead, and we still have months to go before this thing goes public. So time for speculation there too. Spencer, thanks so much.
Thank you.